there's a lot more upside to this bull market.
Now CK is that development stage asset.
132,000 ounces of gold, 24 million pounds of copper.
Luke, it's so good to have you in the studio, man. I feel like I've been waiting for this conversation for a few months now.
Awesome to be here.
There's a handful of different directions I want to go. I want to unpack your core projects, what you're working on. But before I get to that, I just got to ask, as somebody who's been in the business for as long as you have, there's a lot of like new headlines that are disrupting the way people think about our industry, the raw materials sector, right? In a new way with a new sense of urgency. But having said that, it's still really hard when you see these, whether it's like trade aggression headlines, import taxes, export restrictions, whatever. It's hard to determine noise from signal. So how do you do that, right? As somebody with a lot of exposure to both gold and copper, right? On a couple different continents, how do you interpret what you're seeing from a trade standpoint, new American administration standpoint, and how do you make sense of it?
It's simple. It's an evolutionary process. It became, as we know, a misnomer or a dirty industry, the mining industry, right? Unnecessary. We don't need it. Was almost, I think, the mantra, and has been for almost 2 decades. Meanwhile, everything that people touch in day-to-day life, everything in their homes, is milled or mined. And that lack of connection, I think, has just led to a big disconnect and opportunity from an investment standpoint in primary resources. You know, these primary resources that the not in my backyard crew have pushed a lot of this into jurisdictions and countries where the environment's not as well protected, the employees are not well looked after. We've all seen horrible stories and photos of cobalt mines in Africa. So I think it is a complete evolution right now. People realizing this can be done right, can be done correctly.
I love that you said that. And it's my hope that you're like bang on, and that people begin to realize all the friction we had with the natural resource sector was in response to, environment for the most part. But what you just said is so bang on. There's, when it comes to a country like Canada, for example, that vilified the extraction industry for 10, 12 years, very aggressively, for the reasons that actually make far more sense to actually build those mines in Canada, where we have the highest environmental standards in the world, where workers are equipped with safety equipment and they're trained and they have healthcare and regulated work hours and all that stuff. It's actually the best place and safest place to build is in these developed countries, Canada, US, where the opposition's been for the last 12 years. That's the evolution process that you're talking about. People are getting around that, you think?
I think it was even more severe than just that. So it was not just not in my backyard, but then here in Canada and the US as well, lesser so, thankfully, in Australia, but Canada and the US was the institutions or the funds were also then shunned from deploying capital into these sectors.
Yeah.
So with ESG and DEI and all the different aspects that have been stacked on top of companies and these projects, equator principles around mining projects internationally, it became next to impossible for, these large pension funds and such to deploy capital, invest money into mining and energy companies. So again, that was a trend that occurred over probably 20, 25 years that is now being, I think, rectified. The pendulum's swinging. It swung far too far the wrong direction. And like we discussed, it just deployed capital into the wrong jurisdictions, money from, the wrong sources. And that was not good for the environment or anybody.
So do you think that, whether it's new geopolitical frameworks and trade relationships fracturing a little bit, supply of materials is less certain, you think it's, the tech sector waking up to they actually can't build the future they promised without the ingredients that this industry delivers? You think this sentiment shift has legs? Like there's something being cemented here?
Absolutely, I do. The initial shift, obviously, is there's a backlog, or the inverse of a backlog, the need for discovery of these deposits and projects all over the world. All they do is deplete resources. They need to be rediscovered by the junior mining sector who go out and do all the exploration around globally. But these mines, again, they don't have to also be in our backyard. They don't have to be in Canada or the US. But ultimately, where are these primary resources going to end up? because the manufacturing side of it has also been completely demolished over the last 3-4 decades. Everything's been pushed offshore, just like the mining industry itself. So that's why I call it an evolutionary process. We're about 30-40 years behind the step, right? Because of policy and decision that was made, governmental and otherwise. The whole environmental undertaking with global warming, and then climate change. And then the realization that, like we've discussed, when you just then send all these things ad hoc into jurisdictions where they're not properly being measured, or processes where you're not looking after the environment, it's a negative step. So we've got to go in, make discoveries, but ultimately there's got to be industry for them to be fed into, which is not just necessarily China.
Yes. Yeah. And it's like these political narratives are suddenly being stress tested in the real world. It's easy to, we've been talking about the copper deficit, for example, for a decade, right? But a decade out, nobody worries about a decade out, right? Until suddenly next year. And suddenly we're in this frothy AI race, and we just can't build the data centers that we need to. We're in this new sort of uncertain geopolitical world, and Lockheed Martin's like 2 to 5 years behind on timelines because they can't get the ingredients, right? And suddenly these things have come to a head, and those narratives just aren't holding up, and people have to face a new reality, which is good, right? It's a reckoning, and it's kind of like coming to truth, right? This is how the world has to function.
Absolutely. And again, a lot of these primary resources. So let's look to the US again for a moment. Bringing in a whole slew of minerals into the critical minerals list. Hugely important. Deploying capital, helping companies get into development stage. You've got this still broken system where the federal nexuses that manage all that permit process in the US, for example, you've got to tie in Bureau of Land Management, sometimes with forestry. You've got then the Environmental Agency, NEPA, throw in the Waterways of Americas. So you've got to deal with the Army Corps of Engineers, the extensive process that is a whole different group of bureaucracies that you've got to step through or work through. That all needs to be streamlined and worked on as well. So it is in its infancy, I guess, this evolution.
Yeah, that's a really good point, because you do need all of those organizations to begin to focus on the same goal. And to a degree, we're seeing like fringe examples of that. I mean, that Trilogy Metals deal in Alaska, on the one hand, it was a check written $35 million to finance the Trilogy Metals mine in Alaska. But the second piece of it was that then policy was adjusted to accomplish the goal. And the Ambler Road, which has been the barrier, and it was the Bureau of Land Management and 2 other organizations, the names of which are failing me, were ordered by the White House to get in line and cooperate, right? And that sounds, but it was to accommodate, I should say, right? Let's accommodate this project because it's important, right? From a national security standpoint. And I believe you're right. And I believe we're going to see more examples of that. How does that make you feel as like a free market entrepreneur, I imagine? And now we're seeing a bit of like, I don't want to call it state creep, but it's intervention in private business, but for a goal that we all know is important, right? And against a competitor who's been operating that way for 30 years, right? So how do you reconcile that?
So it seems great at the beginning, of course, but then at some point you want them to step back. You can set out with your goals, exploration through to engineering, development, and ultimately production. If you know that process is a set of benchmarks you got to get through on the way through, an established process. That's that simple. And right now the processes are broken, but we don't want government too far in. We don't want them being owners of these projects. And now you're talking about nationalization of mineral assets, potentially. It can certainly, the pendulum could swing far too far the wrong direction. So I mean, there is a concern for that.
100%. It should be the role to provide predictable process, right? So we know exactly what the milestones are. And then maybe clear up the obstacles that are just unnecessary, right? Clear the pathway, right, for business to occur. I'm on the same page. I think it is unlikely that once government starts picking winners, that it then stops, right?
Yeah.
But it's, I don't control the game. I just play the one that's in front of me. And quite frankly, whether or not I find it distasteful to have government in business, I do see it as very bullish for the commodity sector because it's a new activist investor at the table with very deep pockets, but also one who has the ability to shift policy, I think, back to a sensible place, because policy ended up in a very insensible place, right? And now we're getting back to a place that's more complementary to our business, and that's a net positive. Where it ends up 5-10 years, jury's out.
Yeah. Well, I mean, again, there's so much more work to do. It's one thing to discover and harvest primary resources, but it's then having the industry to manufacture or turn them into the final product. And that is where, again, US, Canada industry has been pushed offshore for decades and decades now. So how does that get resurrected? Does it get, fed into a Mexican market versus a Chinese market? That's all yet to be worked out. I mean, how we storyboard that, nobody knows.
I got to get your thoughts on gold, because I think underpinning all of this uncertainty, the bedrock is the gold trade, right? And people are waking up for whatever their reason is, some version of debasement or uncertainty, and they're gravitating towards that asset that lacks the counterparty risk. Yeah. And that's happened in a more fundamental way than I've ever seen. However, inside a secular bull market, there's corrections along the way. So, couple questions for you. I see a lot of gold investors who have been in the game for 15 years, and they're watching now mainstream money become interested in the gold sector, and it actually makes them nervous because they haven't seen that in so long. They forgot that's normal in a strong market, right? But no, their response is this must be the top because mainstream is talking about our little niche hated industry, which is what precious metals has been for 15 years, right? Mm-hmm. Now we're cool again. People forgot what that feels like. How do you process that? And secondly, knowing that it's volatile even if it's on the way up, right? How do you deal with that?
Well, I've always looked at gold in its macro sense, believed in gold in its macro sense, which is, come 72 when Bretton Woods was completed, and you had this, the US currency becoming the reserve currency of the world. That it's just another fiat currency. It's just another fiat exercise that's going to ultimately have a fail at some point, a fail point, like it just always has.
As it always has.
Yeah. So, I've always been massively skeptical. I got into the industry in around 98, 99, the end of the .com boom. I thought a lot of that money was just kind of made up paper money that was going to chase hard assets, real assets. I figured gold was a good place to start. Mm-hmm. It did work well, but for a myriad of different reasons. And ultimately the hard assets that really got chased out of the .com boom was actually real estate. That's when the real estate boom ran. And that was, of course, interest rates dropping. So I actually think this shift or this big move in gold right now is still not relative to the amount of money supply that's been created over the last 53 years of this fiat science test.
Yeah. Right.
Yeah, I think mopping up, if gold is really doing its job right now, which is mopping up some of that excess, which is exactly what it is, it's just been excess and money supply, then gold's got a heck of a lot more legs to it. And yeah, people starting to understand that. Everyone could work out cryptocurrencies pretty easily. The newer generations could. A very close friend of mine who is a large shareholder of US Gold Corp runs two of the largest crypto miners on the planet. And his contention is, if you own crypto, you have to believe in gold. You have to own physical gold as well. So I think if that message starts getting out there, along with just the fundamental reasons why physical gold is now working again and should have been working the entire time, we're in a very bullish marketplace then.
So then I got to go back to your 27 years in the business, right? You've seen a lot of volatility. You've seen markets turn on, turn off, turn on again, turn off while they're turning on, et cetera, et cetera. Yeah. What do you make of market sentiment today? Is it too frothy? Do you even consider it to be? And how do you process the volatility and the ups and downs along the way?
I don't even think it's close to frothy.
Yeah.
I think we've seen obviously some spikes that maybe indicate a little bit of frothiness, but I certainly don't think it's frothy. The amount of inflows into the general gold funds has been meager at best. Okay, so let's talk about that sort of 99 through 2004, the first big rush back into gold after the brown trade in 2000, I think it was, when gold hit $253 an ounce. And then all of a sudden people saw a bottom and money started to come in. The generalist flows then were quite noticeable. You could very much see them. There was very few gold specific funds at the time. So those gold specific funds saw mass amounts of inflow. Why? Because they're the sophisticated investors in the arena generally. We haven't seen that yet. We've not seen these huge amounts of money move into the likes of Joe Foster's fund over at Van Eck, and could list them off as long as we want to. That has not occurred yet. The other thing you see in a frothy market, of course, is more of a retail approach where you start to hear people, general public, speaking about, gold as, or their latest gold stock or whatever. I mean, we're half a decade away from that, in my opinion. This is just the beginning.
Yeah, I tend to agree. And I was in Japan 2 weeks ago with 7 other entrepreneurs, all very successful guys. They made a pile of money, and they're critical thinkers, smart individuals, and they invest, not one of them has $1 in the gold sector, and not one of them had a curiosity about the gold sector. This is just a couple weeks ago. Gold was at $4,000. Yet their investment strategy was like, we just invest in the broad US equities market because that's the most obvious thing anybody should do, which speaks to exactly what you just said, that inside the circle in the precious metals community, we can be fooled to be thinking that it's getting a little bit hot. You take one step outside that circle, it's not even in the conversation yet, right? Yeah.
Yeah. I mean, when you look at the earnings ratios on tech companies and all the different variables therein, there's a lot more upside to this bull market.
Okay. So walk me through, I'd love to just get like the Coles notes, Luke, on what pulled you into the sector, your first projects, the first things that worked well, the first hard lessons you learned along the way.
Yeah, certainly. Again, it was back in 99, and I decided very much that I wanted to get into the what was a well-established business. I was living here in Vancouver, Canada, so I was well aware of the big business in Vancouver, especially at the time, which was the mining industry. I had inherently really had a true belief in gold. I told you right from my knowledge of what occurred through the 70s into the big bull run in 1980 that saw gold run through $850, etc. I wanted to get a piece of that business. I wanted to get into the business. So I was introduced to a project in Val-d'Or, Quebec that needed financing. And I ran around Vancouver trying to meet with brokers into 2000 that might finance the exploration on this project. And the brokers were gone. There was 2 active brokers that I could find, one at Canaccord and one at Hayward Securities, that were actively looking and still talking to junior mining companies in the gold space. So I just started focusing on pestering those 2 individuals.
Yeah.
And one of them turned around and said, look, I'll finance this project and I'll finance that company, but I want you to leave them and come and work for me at Canaccord. That was Ian Gordon was his name.
I was going to ask his name. All right, very cool.
Your father knew him pretty well. So I stepped over from working for this junior mining company to working over at Canaccord, and we started financing just a myriad of junior mining companies coming out of that 99, 2000 dark patch, which of course was fed ultimately by the Bre-X scandal in 97 initially, but getting people back to the table was extremely hard. So we went on to finance a myriad, 50 plus junior mining companies over the space of the next 5 years. And it got to 2005, and you asked me one thing, what was the big thing I learned was the lack of quality management. I turned around and I looked at my then boss, Ian Gordon, and I said, we've financed all these companies, they make all these promises, and 99% of them never deliver. So I'm going to go work on the other side, and we'll start focusing in on the better assets that we've funded and get them moving in the right direction. So that was kind of my soiree into now on the side of the table that I am today.
Okay, I got to ask, like, do you think that bad behavior has changed from a, capital stewardship perspective? Are we any different today?
No, I think as this bull market lights up, there's just going to be a whole new slew of junior companies that don't have the right motives.
Yeah.
The motivation is purely paper plays. But I think that there is a much stronger core of professional mining focused individuals in Vancouver now, that it's not about the promotion. It is about establishing real mineral deposits, generating real wealth. My new company, of course, US Corp, is going all the way into development and production. So again, I think our strengths in Vancouver have definitely come along. So there are more professionals here than there ever were, but yes, there will always be risks with some of the others.
It's a good point, because as the market gets better, diligence actually gets harder, because the volume of things that you see and the promotion always looks good. Plus maybe you're sitting on some paper gains, so you're feeling smart. You're a bit more reckless, less disciplined. It's a dangerous mix. What was your first big win in the industry, Luke?
So as I sort of segued into this, I guess I chose to leave Canaccord in 2005, and I pursued one company in particular that we had funded down in Nevada. It was called Royal Standard Minerals. As I started to really look at what management were trying to do and trying to achieve, they were focused in on one asset in Manhattan, Nevada, which is actually a hell of an asset today. It's actually in Scorpio Gold Corp, but there was a project that was sitting in their shadows that wasn't really getting any focus, and it was called the Railroad Project. So I approached John Ord, a good friend of mine, and said, look, we should go and start a new venture and just focus in on this railroad project in Nevada. So that was Gold Standard Ventures. We started that in, I think, 2008. And of course, that grew from about an $18 million market cap to at one point around $1 billion. And that was all through a discovery in Nevada. At that same time, I was deploying capital and helping other companies in Nevada. So the Gold Standard would be one that stood out, because I think especially we really got into the discovery mode in around 2012 when the markets had rolled over. 2011, of course, was the top of the last real bull cycle, and things started to roll over. So we actually moved against the current or against the headwind. So Gold Standard, I think, would be one that stands out.
Yeah, no doubt. Okay. And let me ask you, after your time at Canaccord, financing all of these companies, you said 50 in 5 years, coming to this realization that a lot of these management teams were not good stewards of capital. If you were to summarize like the biggest mistake that junior mining company management makes to the detriment of investors, what comes to mind?
They just don't deliver on their promises, or they overpromise and underdeliver, right?
Yeah.
So you always want to try and do the opposite. And this is just, everyone in my industry seems to say that, hey, let's underpromise and overdeliver. Generally, good management will make a company work. A project can't necessarily work. Like, you cannot fight Mother Nature, but if you're investing in a good group and they're running a public company and they recognize the pitfalls in a project, they'll work on finding a solution, finding another project, doing what's right by the shareholders, not just throwing their arms up and walking away.
Yeah. I see that same symptom, and I wonder why. And I think part of it's probably just poor planning. If you're building a junior mining company and you're not thinking forward, you're inevitably going to end up in a place of having less capital than you need, and in a place of desperation to raise more.
Yeah.
And your sense of urgency to say whatever you think you have to say to fill that treasury up. A lot of companies do that, right? Yes. And that's the pickle they end up in. Yeah. And also, promoting is easier than actually doing the work, right? And that's sort of a function of the capital markets.
Yeah.
You know?
The old fake it till you make it
Yeah.
mantra.
A lot of people just keep faking it though, right?
Yeah, exactly. Well, look, there's a good working example. So US Gold Corp was intended to be gold standard 2.0. Just myself, John Ord was off with other ventures, but we have this big district scale project in Nevada. We still have it in our portfolio. Keystone, that's right. So the company actually came out June of 2017, went public on NASDAQ with the focus on Keystone and exploration at Keystone. But the mining market just was not there and was not interested in exploration. So circa 2020, we pivoted the entire company, turned on its head, and brought in new management. George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, Copper King,
Wyoming,
because we knew it was not reliant on drill holes and splashy drill holes and discoveries. It was okay. We can go through this process, engineering, permitting, and get towards a development stage asset. So a pivotal decision that's really saved the company.
So let's dive into that, because now CK is that development stage asset. You're at a very exciting stage. We'll get into that, right? Near term, some big catalysts on the horizon. But for anybody, Luke, who's putting fresh eyes on US gold for the first time, we'll get to Keystone because I want to talk about Nevada, but let's focus on CK.
Of course.
What do people need to understand about what you're doing in Wyoming?
Well, I mean, it flies in the face of what I've just said about permitting in North America and the possibilities that surround it still right now. Our project is right in the southeastern corner of Wyoming, just south of township of Cheyenne. Okay. So to give you kind of just a mental understanding geographically where that is, if you land in Denver International Airport, everyone knows where that is. You drive about an hour and a half north, you're on our project, just across the Colorado border. So we're on state ground, and the state of Wyoming has precedent whereby if you're on state ground, then we only dealt with all of the state agencies on the permit process. So knowing that we would be dealing with real people in real time, we set up offices in Cheyenne, which funnily enough are only about a block and a half away from the federal agencies that we dealt with in the state. And we embarked on first engineering reports. We had to prove that there was an economic base case or framework to even want to go in and permit this project, right? Is it going to make money? So George and his team, again, George, 16-year Barrick employee building some of their largest mining operations on the planet. I figured he was more than qualified to work out if this was worthy of digging a hole or not.
Okay.
So he brought in a bunch of his old work associates, and we started a drill campaign. And then from the drill campaign, moving into a full engineering report and study, which is a pre-feasibility study. And we came out with our pre-feasibility study in 2021, December of 2021, and it showed a really, really impressive economic case for advancing the project through permitting and obviously towards development. Since then, we've completed another one, an updated one in February of this year, and we'll have final definitive feasibility out in December of this year. So we took the 2021 report, the pre-feasibility, and we embarked on the permit process in the state of Wyoming. And it was actually just as arduous as you would hope and expect it to be. Hey, we're dealing with air quality, we're dealing with water containment, wastewater, noise, impact on traffic studies, all sorts of different variables, which are important when you're dealing with a project 20 miles outside of a township, within short distance of people's homes. So we embarked on all sorts of local community, education, social outreach, but worked in with the state regulators, and we received permits to mine in November of last year.
Okay. So, permits to mine in November of last year. Yeah. All right.
So in the space of 4 years, fully engineered, fully permitted, which is,
And this is like 1.6 million ounces of gold equivalent. The ASIC is what caught my eye. It's like $937 per ounce.
Correct.
Right there. And projection around 100,000 ounces per year at the gate.
Yeah, 110,000 ounces per annum. The first year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front end loaded like that.
Right. Explain that. Why is that?
The mineralization is exposed right at surface. So it's a very low strip. It's an open pit. It's a porphyry deposit. It's open pit is the method of mining. However, up front with exposed mineralization at surface, you're all pretty much zero strip in the first year.
It's the amount of dirt you have to remove to get at the metal adds cost.
Right. And even life of mine, though, it's under 0.9 to 1 strip ratio, which I know, a lot of people listening might not understand that very well, but it's extremely low. So that's, again, what keeps it low cost.
Yeah. Okay. Bankable feasibility study due by the end of this year.
Correct.
But you're not waiting on that to make the construction decision. Is that correct? You already feel quite convicted in this.
Correct. And, we've given plenty of hints to that publicly lately. We signed under a month ago our power usage agreement with Black Hills Energy. Okay. So that they're going to start transmission of power to the project. And this is, again, is testament to the amazing location of this project. They're transmitting power all the way to the project at their cost. And then we pay them amortized through our power usage. So 7.2 cents a kilowatt hour, which is extremely low. And again, we don't pay for that transmission. We pay for it through that power usage. We've also announced that we're about to embark on building our access road from the deposit out to the paved road, which is about 2 miles. It's not too far. We're not, again, somewhere in the high Andes or off in Alaska. We've got paved road just 2 miles away. So there are little Easter eggs that we keep dropping out public domain that show that this project's getting developed. But it'll culminate to the definitive agreement, the definitive feasibility coming out December. And that's just really to help us drop the cost of capital to build it. It gives more confidence to the banks and the institutions and the lenders, so we can create more competitive tension around the loan that we ultimately will embark on, because we want to do this predominantly in debt. In fact, all in debt if possible.
Oh yeah. Okay. Yeah. That's interesting. Okay. And that kind of gets me to, so that's the next step. You get the bankable feasibility by the end of the year. That allows you to take that offer to the market, solicit bids. And the more, you can show this to, obviously the more competitive your cost of capital will be. You want to do as much of it as possible via debt. But just, you've maintained an incredibly tight share structure along the way. 14 million shares out?
Yeah, 14.3.
14.3 million shares out for a company that's got production in the near term view. So 2 things. Walk me through that strategy. Was that an accident? Was it intentional? How did you manage that? Right. And is that part of the same philosophy that's attracting you to a debt financed mine?
Well, that circles back to our discussion about management, strength of management. We're aligned with our shareholders, and you'll hear me say that a lot, but we're aligned with our shareholders. Why? Because we are shareholders. So we've invested our own capital into the company. When your focus is the stock, then you have every other shareholder aligned with you. And quite often in management teams, you don't see that. They've been diluted down over a 10-year period in their company. Now they're more interested in just raising capital, ensuring that they're paying their own wages, and becomes a lifestyle company. So that's not occurred. That 14.3 million shares of issued and outstanding, we have raised in the realm of 70 million US during that time to get the project to where it is today. So it's been a labor of love, to be blunt, to keep the share structure so tight. So we are definitely not interested in having that all of a sudden blow up at the culmination of now going into production. And ultimately, you also do generally want to build these things, and especially a robust economic proposition like CK, you want to do it all with debt, because why take the equity?
Sure.
Yeah.
Okay. You got a lot of analyst coverage. I think Beacon Securities, Roth Capital, HC Wainwright, Paradigm, forgetting a couple, I think. Can you walk me through the timeline as best you can estimate? And can you talk about that, right? When are you predicting, forecasting, first pour production?
Yeah, of course. It's an 18-month process. So if we had the capital in hand today, 18 months time would be, and I think even then George would say it's relatively conservative at 18 months. It's not a hugely sophisticated kind of operation from a mining standpoint. Which means there's not a whole bunch of lead time items that we need to specialized equipment that needs to be pre-ordered. A lot of it is off the shelf type, crushing facilities, the flotation circuit. We've already signed a deal with Glencore Technologies on a couple of Jamison cells, which we're going to be using for our slot circuit. Because ultimately what we do is generate a dry concentrate out of the property. So we're not going to be smeltering or anything. No stacks on site for smelter, all the sort of undertakings that usually would be cost prohibitive and long time to build. We don't have them.
Got it. Okay. So how should investors think about, in that context, how should they think about Nevada, your Keystone asset? Is this like an optionality play? Is this we'll get after this next? Like, how should people think about how that fits into this piece?
It's the big lottery ticket sitting in our portfolio of assets. More likely would be better off spun out and away from CK. So us collectively as shareholders, if Keystone was to be spun out of US Gold Corp into a standalone company, for example, where we bring in standalone management for that asset, because we've got one of the top engineering development management teams I think you could generate out there in a junior. Exploration in Nevada is a whole different undertaking.
It's a different story.
Whole different story.
Yeah.
So I think more likely we will spin it out, but we are doing some early stage preliminary exploration work there right now, mainly geophysics and just tying together the case for where one would want to go in and drill it and have the higher probability drill holes. So, it'll be a spin out though.
It'll be a spin out. So that's from your point of view, and I would agree with this. CK is driving the value of US gold. Keystone is a sweetener, right?
Yes.
We're going to go a different direction with that, but that's in the portfolio now. It'll be spun out and operated separately. And then obviously, you have a property in Idaho, Chalice.
Chalice, yeah.
Chalice. Yeah. And anything we should understand about how this fits into your puzzle?
Chalice is a remarkable asset. It's got 300,000 plus ounces of historic resource there. There's something far bigger going on there, but we just do not have the time or interest to deploy capital at it right now. But we've done a lot of work in the background. We've completed a plan of operation, which is a 3-year undertaking. Not many people understand, when if you're a single asset company and you want to go explore something in the US on Bureau of Land Management ground these days, you need a plan of operation. And the plan of operation, again, is taking upwards of 3 years. So Chalice is geared up and ready to go for a major exploration undertaking. We just we're not there right now.
Well, you can only do so many things well at once.
Exactly.
And also investors can only decipher value in so many ways. And if the story is too complex and you got things over here and it's like, no, we're building CK. Yeah. That's what's driving the value of this company. Yeah. We got a couple optionality plays over here, but this is what's driving the value, right? So come for this, stick around for that, right? That's the strategy right now.
Yes.
Yeah. Okay. My audience wanted to hear about US Gold and CK. I'm inclined to ask if we can talk about Leviathan, and if we do that another time, you let me know, but can we get into that a little bit?
Yeah, I'm more than happy to.
Awesome.
Talk about it.
Okay. So Leviathan, copper, right?
Yes.
Different story.
Yeah.
I think your timing's really good and interesting, given, like we talked about at the front end of this interview, that copper cliff isn't 10 years away anymore. It's like just last month, Bank of America, Goldman Sachs, they're all revising their copper forecasts not for 2030, but for 2026,
Yeah.
right? Moving into a deficit next year in response to Grasberg in Indonesia shutting down, second biggest copper mine in the world, among many other things. The industry is in such a supply crunch that little events like that, it's not little, it's a big mine, but it's very vulnerable to disruptions right now. They make a big ripple, right? So walk me through Leviathan.
Yeah, well, look, and the other bit you're missing is the demand, meanwhile, is just exponentially growing. We're all familiar now, we've all heard the adage that Google search versus an AI search, AI search requiring 10 times the amount of computation, the amount of energy that's required therein, transmission of energy, electrification of the automotive industry, the demand on copper, along with other metals, but copper in particular is, I see no sustainable way that this earth is going to keep pace with it. So
Agreed.
I think copper has got a huge amount of legs to it. I've been very much enamored with copper for about 5 years. So I instructed a very good friend of mine and a geologist over at Leviathan, Jeremy Crozier. I said, let's go find world-class copper asset. Let's get to work on it. And, most of the results or returns on that are these big, deep, high Andes porphyry targets, or into Arizona. They're more common what you would look at as being a tier one kind of discovery project. Well, Jeremy came back with a very big land package on the Kalahari copper belt in Botswana. And I didn't know much about Africa. I knew nothing about Africa. I've been to South Africa a couple of times. I always found and believed that Africa, most countries in Africa were difficult, unstable jurisdictions and not places I wanted to invest my money or time. I was convinced otherwise to go down to Botswana, visit. I did, and I was blown away. Botswana is a standalone. Namibia as well, but from an investment perspective, De Beers are in there in a big way with huge diamond projects down there. There's a myriad of other companies operating down there, but ultimately this Kalahari copper belt itself is a burgeoning major producing copper district, and globally, a couple of big discoveries that were acquired and consolidated by MMG Mining, a Chinese publicly listed company on the Kalahari copper belt called Khoemacau. Really highlighted and brought, I think, international attention to that area. They're one of the lowest cost copper producers on the planet. They closed the acquisition of Khoemacau April of this year for $1.9 billion. They've since put another $700 million work into it. Mm-hmm. And Jeremy and his mastery managed to get a entire complex right next door to it with the same geology and a continuation of what looks to be their mineral deposits.
Okay. Let me ask you a question. I feel like something has to change in the copper market for us to meet this demand. I don't know what that thing is yet.
Yeah.
One could be that smaller projects will become more palatable. Maybe there's more of an appetite for mid-tier producers than there used to be. What's your take on that? How do you think this develops? Because we're in a situation where either we halt production and innovation, which we're not going to do. Yeah. If I have one high conviction thesis, it's that I'm long human ingenuity and progress. That's not going to stop. So that means the price goes up. That's the other thing that has to happen.
And that's the solution.
That's the solution right there.
That's the solution.
Okay. And that incentivizes, because there's still, long processes to get these things.
Absolutely.
Very long, right?
Yeah. And especially those deep ones I was talking about, these deep porphyries, just making those discoveries and then getting them through permit and development stage, they're greater than 10 years. Price is a solution generally for scarcity. Smaller mines are just going to be the way.
You think so?
The way moving forward,
yeah,
absolutely.
There's more appetite because the demand is there.
Yep.
You have more political organizations on board to move that permitting time and compress it a little bit. Let's get that more realistic because this is competitive now, right?
Yeah.
Yeah. And the capital, the price is there to incentivize the capital to flood in a bigger way, move more projects forward all at once, find the winners quicker than we've been finding them, right?
Yeah.
Yeah. Okay.
Absolutely.
Awesome. Okay. Look, Luke, it's been fascinating chatting with you. Thanks for coming down and joining me in the studio. I sincerely appreciate it. congratulations on US Gold and the CK asset. So we know what to look forward to, my audience. We have the near-term catalyst that's right around the corner, and that's very exciting, and a good understanding of the, project mechanics at this point. And then keep your eyes open because Leviathan's coming.
Yeah.
Yeah. Okay.
Most definitely is.
All right. Thank you.
Thank you.